Hey guys, welcome back to another video, and if you didn't know, this is a follow-up to my last video for the stocks that I didn't get to yesterday. So today we're going to go over those stocks. We're going to start with the first one, which is NEO. So this stock is absolutely ripped higher this year, and it's coming to its 161.8% extension here after breaking out, and then rejected that extension and now is consolidating in what I believe to be a fourth wave here. So there's a few ways you can go around trading this stock. I think if you're looking to buy the stock short term for a move higher, I think you can buy the stock around where it's at now and put a stop loss under these recent lows here. If it falls back into this gap, the price is going to slide pretty quickly. So you can put a stop loss against this gap demand, and you can see if you can get one final wave higher to the 261.8% extension. That would be at about $20. I think this stock has a decent chance in going to around the $20 level, and you can put a stop right below these lows here. If you're looking to buy the stock longer term, you're going to want to wait. You're going to get a better entry than where it's at now. When these stocks tear higher, people are inclined to chase them. And, the people who chase stocks always will get decapitated every single time. Especially if they're buying and holding and they're thinking it's going to keep climbing. Usually that's not the case. So if you're looking to buy the stock for the long term, what you're going to want to wait for is a back test of this longer term trend line down here, and then you can long the stock and just ride this trend line higher. Now, if you're looking to short the stock, you can't really short it right now because the risk to reward isn't very good at all. But you can short it if we get a retrace, let's say back to this $16 level here. You can short it versus these recent highs here. And you could get even a double top as its final wave here, and then the price pushes back down to, let's say, here. I think you could easily see a double top, and you could see a retrace back to this breakout level, and then if it falls below that level, it should go to this long-term trend line down here. It doesn't show it on my chart, but actually the long-term 38.2% retracement sits right at this $10 level, which is usually a pretty big demand zone. Usually when a stock starts to retrace some of its move it's had, usually it's going to find demand at that 38.2% retracement more often than not, and it's going to at least bounce close to the prior highs. So that's something you could probably expect here. It's actually a pretty good risk to reward on the long side. You're risking about $1 for $8, so it's pretty good. If the price does fall below this $10 level, you're going to be wanting to watch the 50% retracement at $8.85, and then below that, there's really nothing until that long-term trend line. So yeah, that's my views on NEO. I think if you're a long-term investor, you wait for a pullback to this long-term trend line. Or if you're looking for a short-term trade, you buy versus these recent lows, set a stop under, and then you trim half against these previous highs here. And then see if it can break out above those highs and see a move to around $20 a share. So the next stock we're going to be looking at here is KO, or Coca-Cola. And this stock has recently seen some pretty significant downside, and it's at a bit of a crossroads here. So right now you have this sort of long-term trend line from 2008, and the stock actually has fallen below that trend line and is sitting right below it right now. So if the stock is able to break back above this trend line, that would be a very bullish signal in the shorter term. So what you have on the daily chart here is pretty interesting. You have this W formation here. The 161% extension of this recent consolidation range here sits at around $54. So if this stock is able to break above its recent highs here, I would expect a move probably to around $52 to $54 in the coming days/weeks. I actually think there's a good opportunity to short the stock here. I think you can short the stock as close as you can to this $49 level with a stop over it, and then that would be a decent risk reward entry on a short position. If this is a 5 waves move down and this is an ABC wave and now we're consolidating to pick a direction, I do think in this case there's more overhead supply because of how much this overall move we've retraced than the overall demand. So I think there's trap buyers up here creating a level of overhead supply that could cause selling back down to possibly these previous lows and potentially even undercut those lows. So longer term, if you're looking to buy the stock, you should probably wait for the price to give a better risk to reward entry. You could try and enter and put the risk versus these pivots here, or you could wait and see if we get a break back to these lows and then put the risk versus this previous low here. I think a retrace back to these previous lows is very possible here. This is kind of no man's land, and it really depends on which way this range breaks. I would be more inclined to say this range breaks down rather than up because it's still sitting below this long-term trend line. So if we do end up breaking down, you could actually reverse this Fibonacci level and draw it backwards, and what you want to be looking for is this 138.2% extension and this 161.8% extension, which sits at around $39 to $40. So I think if you're looking to get long the stock, you want to wait for this area down here, where we could even undercut these pivots here and then break back above and then see an influx of buying back to this $50 level up here. I think there's a good possibility something like this plays out. So longer term, I think you want to wait for this consolidation range to break out one way or the other before picking a side. And then you can go ahead and long or short the stock based on which way we break out. Right now, you do have a pretty good risk reward entry on a short position. You're risking about $2 for potentially around $8. Now the final stock here we have is WKHS. This stock is absolutely torn higher. Now, I do think this is a very similar setup to NEO, like I discussed earlier. You do have this kind of 1, 2, 3, 4 move, and then you could expect a fifth wave higher, potentially to the 261.8% extension. You can use the same strategy here as you would on NEO. You can long versus these recent lows here with the stop below. But longer term, if you're looking to get in the stock, you're going to want to wait for the price to retrace some. And again, very similar to NEO here, it's sitting right at its 38.2% retracement. Again, the 38.2% retracement is a pretty reliable demand zone, and it's the first place you usually want to look when a stock pulls back from a big move like this. It's the first place you're going to want to look for demand. So yeah, I think if you're a short seller, you're going to want to wait for a move back to these previous highs here, and then you can short versus these highs. Or if you're looking to buy a long position, you can take a position versus these previous lows here, and if we sell below those lows, you're going to want to stop out because we should see a pretty large move back down. So yeah, that's my views on WKHS. Pretty similar to NEO. I hope you guys enjoyed this video, and I hope you subscribe and leave a like.